Hey traders, this is Jeff from ZenTrader.ca with a market update, and I sent an alert out to my free subscribers to my newsletter on ZenTrader today. And if you're not on that, you can just do that by entering your name and email in the sidebar banner on ZenTrader, or you can just go to ZenTrader.net if you're listening to this on YouTube. Essentially, I have two signals that make up my timing signal. I have a longer term and then I have a shorter term. And generally what I've done in the past is when my short-term signal switches, I issue a sell or a buy, or sometimes when it changes, I've issued a caution, and that's what the yellow arrows are. And I think what I'm going to do is I think I'm going to mix it up a little bit, because in the past, for example, here, my short-term signal turned down, but my long-term signal was up. And I think what happens is you really need to have both of these signals in alignment, or what's going to happen is you're going to get whipsawed. And I think that that's where we're at right now. I think with my short-term signal turning down, but my long-term signal still being clearly up, I think when this situation happens, instead of automatically getting short the indexes, I think a smarter move would be to exit out maybe any weak longs, be a little bit more quicker taking some profits, and maybe hold back entering new longs. That might be the safest method going forward, because that way if you're in longs and you do get a whipsaw like you do here, then you get to hang on to the trend a little bit more. When I look at the NASDAQ, we're in a very well-defined uptrend. Yes, the RSI went negative here, more so than it has since June, meaning it's gone the deepest in the oversold reading. The Dow, I haven't updated these trend lines, but we're getting higher highs and higher lows, so that's positive. And the TSX is equally as strong. A dip below the RSI on the TSX has generally resulted in an oversold reading, and it's sprung back each time. Now at some point it's not going to, but I don't see a whole lot in this chart that screams the sky is falling. And then when you look at the daily chart of the NASDAQ, you've got a 50-day and a 200-day that are both pointing up. Today was, the volume was lower than the past couple of days, but there was some serious accumulation days going on here, and you don't want to fight the Fed in that axiom. And then a couple sentiment charts here, or secondary charts, I guess would be a better way to describe them. The NASDAQ high-low is still right around 80. This is a momentum phase type. It is waning, but this isn't nothing to worry about. The tick is at a reading where it's generally the markets bounce, and as they did today. So I guess, and I believe we have a full moon coming up real soon, so that's going to be interesting to see. So I wouldn't recommend getting short right now. I would recommend getting your short watch list ready. I would recommend, again, to recap, be cautious about over leveraging yourself, I guess, is a good way to say. Maybe don't enter new longs right now. Just manage what you've got and be quick to take profits. I think that was 3. So yeah, and then when and if my long-term signal turns down and combined with the short signal, I think that's going to be a more powerful indication of a market that's ready to sell off. But I just don't think we're there yet. Or the other thing that you could do, although I don't think I'm going to do this, you could hedge. You could keep your long positions, and then you could hedge with a market ETF. But I was thinking about that today, but I think I'm just going to manage my long positions that I have, because I'm just not sold that the markets are ready to sell off. I think today was a nice start. We'll see what happens tomorrow, and then maybe over the weekend I'll feel differently. So those are my thoughts. I know that they're kind of all over the place, but it is what it is. So have a good night, guys.